Okay, let's start booking our transactions for the month of February. And first we have our invoice paid by credit card from Food Traders. Alright, so let's go ahead and enter credit card charges. And what do we have here? We have Food Traders, and please make sure you enter the date it's paid, reference 80082, amount. So again, let's make sure what's going on behind the interface, right? What's being debited, what's being credited. So our liability, our credit card account is going up, and liabilities are increased through credits. And our expense account for food purchases is going up, and expenses are increased through debits, right? So again, as you can see, debits and credits are in agreement. And I'll repeat myself from previous sessions. Again, this window right here is a debit for this account, 6,200. And then this window right here is a credit for this account, 21,100. Very important to understand what's going on behind the scenes. So let's save and close, move to the next one. All right, next invoice is also paid by credit card. Alright, so let's go ahead and enter that one. Paid on 2/14/2020. So what do we have here? We have food containers, so more like restaurant supplies, right? Similar as previous month, but you know, practice makes it perfect. Let's see what's going on behind the debits and credits, right? Very important portion of it. So we're gonna see what's going on here. So as you can see, again, account 6100 restaurant supplies was debited, and that's an expense account, and that makes sense. It goes up, right? Because we incur an expense, we spend some money. And then our credit card account, which is a liability, is increased because we credit it, right? Remember, liabilities are increased when we credit them. So this one is good to go. Let's do the next one. Next one was paid with the check, right? So we're going to go to banking, write checks, make sure the check number is correct, 2005. Again, if you're entering it post factum at the end of the year and you wrote those checks by hand, please make sure this button is unchecked, because if you click print later, you will not be able to enter the check number by hand. Because when you print it, and we'll cover that in the future topics, is you know, it automatically assigns the check numbers, which is a wonderful feature. Anyway, let's continue. Again, we're going to use our invoice number as our account. So what do we have here? Again, this sounds like cleaning supplies. Continue. Again, what's going on behind? Well, now we're paying with our check, right? So the money is going to be leaving our bank account. So let's go ahead and take a look what's going on. Well, bank account is an asset, so it's decreased when we credited, right? So it goes down. What else is happening here? Well, our expenses are going up through debits, right? Here we go. Our debits and credits are in agreement. We're good to go, and we can go ahead and post this one. Our next one is a credit card. What do we have here? We have drinks, right? So again, drink purchases, supplies. So let's make sure we understand what's going on here. in debits and credits. Again, our liability is going up because we paid it with a credit card, and our expenses are going up because we are incurring expenses. So again, debits, credits, and agreement, we're good to go. Next one was paid by check. So we're going to go write checks. Right? Make sure the check number is correct right here. Date. Alright. Okay. That's our utilities. Alright, again, what's going on behind the scenes? Our bank account is an asset and it's going down. Here we are, and our expenses are going up, right? By the same amount, lump sum. Again, our debits and credits are in agreement, as you can see. Therefore, we're good to go. We can go ahead and book this transaction, save and close. Alright, one more invoice we have here, and we're going to book that one. That's from Big List Company. So let's go ahead, and it was paid by a check, so we're going to write a check. By the way, this is an easy way to take a look at our other checks that we wrote right in, right, that we just checked. Anyway, very nice, nifty feature that they have in QuickBooks. Okay, what do we have here? We have one of those invoices that we need to dissect a little bit more than book it a lump sum, right? So we have a rental, Lily's. So let's go ahead and get through this. So we're going to book partially into the rent. And then we also have insurance. All right, so we want to make sure we capture everything correctly. And then we have registration. So it's going to be our dues and subscriptions. Then we have maintenance, repairs and maintenance right here. And then remember that artwork that they put on our truck, so we got to put it into advertising and promotions. Again, we're going to use our invoice number as our memo, as our reference. And let's again see what's going on behind the scenes. So first and foremost, the easy part is we know that, again, our bank account is going down, so it's going to be credited. So what are the offsetting entries? This entry is fun because it's a little bit more complex than lump sum. And what we have here, we credit one account, but we debit multiple accounts. And that's, again, very typical. Sometimes, again, like I've mentioned previously, you could credit 2 accounts and debit 6 accounts, right? The number of accounts on the credit and debit side is absolutely irrelevant. What is important is that at the end of the day, these two amounts, it's the sum of debits and the sum of credits for each entry balance, right? So that's what we're going to do right here. And voila, they do balance. So again, this entry is a little bit more complex, so I just want to draw your attention to that. What do we have? We have 11,100. Our bank account is being credited right here. That's the amount. That's the entry. This window is actually credit for this account. And then we're debiting these accounts. So each one of these is a debit for this account, right? So again, we're good to go. Let's save and close and move on to our next transaction. Save and close. Now we're going to book receipts. All of these receipts are for our credit card. We know that because of this credit card number right here. So we're going to go and enter credit card charges. Again, this is pretty straightforward, right? We're going to continue using the transaction number in our memo fields. And this is our truck expense for fuel. So again, we're buying it using our credit card, so we're not actually spending our own money. We're increasing our debt. So our credit card account is credited, it goes up, and then our expense account 63,200, it's our fuel expense, that's debited, and that also goes up, right? Our debt goes up and our expense goes up because we finance that expense using debt. So again, let's save in new because the next transaction will also be credit card transaction, so we'll book it. Again, we got another gasoline receipt right here. Okay, that's again our fuel. Again, what's going on behind the scenes. Similar as on the other transaction, but again, I want to make sure that we solidify the knowledge. It's very important. You know, I'm a true believer that practice and repetition make it perfect. So debits and credits are correct. Here we are. We're in balance. Save menu. Oh, mobile service provider. Excellent. So now we're going to pay our mobile service bill. That's a good one, right? So let's go ahead and repay those. Okay, we're going to do a quick add here. It's a good opportunity. Again, you can just select vendor and click OK, and the vendor is added. Again, this is a quick add without setting up any additional information. I'm going to enter the transaction. Okay, and this would be our telephone charges. So again, we have telephone expense. Here we are. Again, we paid it with our credit card. So let's make sure we fully understand what's going on behind the scene. So we're debiting our telephone expense, 62,600. It goes up because expenses go up when debited. And we credit our credit card account because liabilities go up when they're credited. So again, we finance this expense using a liability. So they both went up. All right, let's go to the next one. Okay, we have transaction receipt for bank payment, right? So this one is where we transfer money from our bank account to pay for the credit card, right? Because we can't max it out, at least we don't want to. So again, we're going to click this button, refund credits. All it does, it basically reverses the behavior of some of these windows that we just talked about. So let's go ahead and do that, and we'll see in a second. So what we have here is the opposite behavior on the interface to what we have when we have purchases or charges, right? And again, this is coming out of our bank account. And let's see the debits and credits behind it. So what's going on? Our 21100 account, it's our liability account. And when we pay money into our liability, when we pay money to our credit card company, we reduce our debt. So liability is going down. Liabilities are reduced when we debit them. So this window right now is a debit, right? It belongs to this account, 21100, and it debits it, right? What else is going on? Well, we just used our bank account, so we moved the money from our bank account to pay our credit card, and that money left our account. So our bank account got reduced by the amount of the transaction, and bank account is an asset, and assets are reduced when they're credited. So we credit the bank account, so this window is now a credit towards this bank account, towards this account, 11,100, and therefore our bank account is reduced. The transaction is in balance, debits and credits equal to each other, and at this point we can say, save and close. All right, clear this for the next transaction, and that concludes posting transactions for the month of February.